Hey, welcome everyone to our Story Trading Weekly Meetup. We get together here with the VIP community every Sunday night at 9 p.m. Eastern. And on most of the days, we have a special presentation. Tonight, it's on a new stock we've never really collaborated that much on. It's SoFi, ticker symbol SOFI. Before we do that, we got to show you a couple slides and get some housekeeping notes out of the way. So first, Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This presentation is being recorded, will be exclusively for our VIP members for a period of 7 days before we upload it to our YouTube account. If you're watching this on YouTube and you're not familiar with story trading is the practice of understanding market pricing through the lens of 4 pillars. So it's looking at stocks holistically through fundamentals, catalysts, sentiment, and technicals to better identify trade and investment opportunities. Together, we collaborate as a community on WhatsApp, on Zoom. We've been doing that for a couple of years now very successfully. And we're building our own app on iOS and Android to help scale that, experience and bring it to the masses. You can sign up for a wait list at storytrading.com for that. You can also see our past VIP picks over on our website, along with a bunch of other information and links to all of our YouTube videos. Now, I know we're about to talk SoFi, but before, I just want to take a quick pause. In fact, I'm going to stop my screen for 1 second because everyone's thinking about the market and talking about the market. And I can say it hasn't been a great environment for story trading style picks. A lot of what we like to do is time picks based on catalysts and based on a combination of catalyst, sentiment, fundamentals, and technicals. And it's been very hard to do that because stocks are essentially moving with the market. Doesn't matter what the news is, doesn't matter what the valuation is, nothing matters except the market. So it's been a difficult market to pick stocks and have trades and do trades. I know a lot of it, hopefully, many of you have been doing some hedges the last couple of months. I warned of that in November, of a volatile period that may come in December and January. Personally, I've been moving some of my hedges over from shorting the NASDAQ to going long gold and bonds right now, GLD and TLT, because I'm having a hard time at this point trying to find a bottom in these. There's more risk, right? Trying to short the stock market now after it's already come down, but I still don't feel very bullish on, a turnaround, which is why I'm opting to hedge with TLT and gold. So that's a lot of the conversations, and it's not just my opinion, but lots of different opinions in the VIP trading room throughout the week as we're trying to see what's going on with markets and hedging. And in the meantime, we're continuing our collaboration, continuing to learn about stocks. We had an awesome presentation on BioCris last week, BCRX, which happened to do really well. Very well-timed presentation. The stock was up 8% last week. It's been up some 250% since it's been presented to the community. So still stay up to date with those VIP picks. Still, we get informed about a new stock tonight from Akhil on SoFi. And when things settle down at some point, when the market volatility settles down, that'll give individual stocks a better chance to actually do well based on individual catalysts and fundamentals instead of just being taken with the market. So now it's time to do our homework. And with that, Akhil, let me just quickly show, there's a couple basic stats. Ticker symbol SOFI, last trade $11.10, market cap 9.13 billion. I'm excited to hear about this, Akhil, because this is a stock I see all over Twitter, everywhere, and I've seen it a lot about it. And the chart, do I have the chart? Here we go. The chart's in a place where it may be interesting, for us at Story Trading to start paying attention. Man, make what you will of this, but obviously begin getting hurt by the growth sell-off right there. In growth stock, so we're going to try to learn more right now from Akhil about the fundamentals, the catalysts, and maybe we'll work in some sentiment and technicals with that as we collaborate together in the coming days and weeks. So with that, Akhil, take it away. Welcome back to the show.
Hey, thank you, Ben. Can you hear me okay?
I hear you fine.
All right, so let me share my screen. Slideshow. And can you see my screen?
Not quite yet. Let's make sure the security settings allow you to share screen. They do.
Oh, okay.
There you go.
All right.
Okay, you're all set. Go for it.
All
I'm
right.
excited to hear about this.
All right. Hey, everyone. So, yeah, I mean, a lot of people talk about SoFi on Twitter and a lot of social media platforms. It is a pretty, I mean, if you're in the US and you have anything to do with either investing, stock trading, or putting up money in a bank, etc., then you've probably heard of the name SoFi, right? I had got to know SoFi like a lot of years before IPO. I am from Rice. If people don't know, I went to Rice University in Houston, and one of the co-founders was actually from Rice. So he used to invite us a lot to the headquarters. So I had the opportunity to visit the headquarters 2 or 3 times and met with a lot of executives long time, 4 or 5 years back. So I had known the company, and you know uh, so when it became public, I did a little bit of homework, and since that time it has become a really big interesting company. So hopefully I'm going to share some information that is going to be useful for you guys. Just a little bit of disclosure: I am long SoFi. It has not reacted well in this growth sell-off, but I'm holding it. And just some legal stuff out here. All right, so what does SoFi do? uh, it is hard to explain actually what SoFi does. To be honest, they do a lot of stuff, right? Anything to do with money. So for example, if you want to take loans, personal loans, if you want to put money in your bank account, they issue SoFi branded credit cards as well in partnership with MasterCard. They have recently started selling insurance through third party vendors as well, including Lemonade and a few more. They do credit scores, auto loan refinancing, a lot of stuff, along with another exciting thing which I'm going to share. And they only started with student loan refinancing many years back. That is how I got to know the company. Um, in fact, when I came in as an international student for study in the US, they were pretty much the company who offered the best student loans for any student, right? Uh, and their factor was, they not only help students with the loan refinancing, etc., but they also have that social aspect of creating communities around students and helping them find job opportunities as well. That's how the name came into being, social finance, right? If you are wondering where that name came from. So pretty much few years back, they were only doing one stuff, and now they are doing a lot of stuff, right? Uh, uh, so when I look deeper into their business, they are doing three types of business, right? One is loan origination, right? So home loans, personal loans, and student loans, right? That's one business. And this is about 65 to 70% of their business. Okay. SoFi Money and Brokerage is a new thing that they have launched probably since last year, right? So you see a lot of people moving into their account, their investment or trading accounts from Robinhood to SoFi, uh, because of the way Robinhood handled their customers last year. So they got probably free publicity, uh, right? SoFi Money is kind of a wallet where you can keep money and pay for things. They have some cashback programs, etc. And then they have the third segment of business that they have is Galileo, which is a very interesting business. I have to read much more about it, but essentially it's a technology platform uh, where they enable other banks and companies who want to launch fintech products using this platform, right? So, for example, like one of the use cases is, as Shipped, which is so these are some of the existing customers they have, right, on Galileo. I'm going to share some numbers also on the growth of Galileo, etc. But essentially, these are a set of APIs, etc., uh, which through which these banks or other companies they can use the services of SoFi and create things like virtual credit cards or virtual cards for their customers, loyalty programs, uh, etc. Okay, so you see a lot of fintech players out here. Robinhood uses Galileo, for example. SoFi, of course, uses it. MoneyLion is another fintech platform that uses their services. Shipped uses it to pay their uh, gig workers, right, etc. So Remitly is a cross. Remitly is a it's a company which again recently IPO'd, and it's used to transfer money across countries and through in international boundaries. So a lot of customers out here. So this is almost like a SaaS business, which so in fact, like later on, I do tell that it's hard to do valuation on SoFi because it acts as a kind of like bank, a brokerage firm, and a technology platform. Some of the growth numbers from SoFi, this is from their latest presentation in November, right? So they, by members, you mean, the number of unique people on their platform. So pretty much growing, really, really quick. So in 19, they were growing at 37% year over year. And in the latest quarter, you see, they're growing at 100%. So the growth has also accelerated over the years, which is great to see, right? The number of products. So these are the number of things that people buy from their platform, right? So you saw, they have investment accounts, brokerage, etc. SoFi Money, and there were like many other insurance stuff. So what people buy, this has also been growing up. Um, Again, this is again the lending products, financial services products, so pretty much growing up. Galileo growth has been pretty impressive. So this is a company that they acquired about a year and a half back for $1.2 billion. And now it's almost a $200 million recurring business. So, like, again, their customers have been growing pretty rapidly on Galileo. And a lot of customers are international. So, you're also investing in international growth when you are investing in SoFi. Any questions so far?
I'm making a list. I got some questions, but I'll hold them for the end.
All right. Okay. Sharing some financials. Okay. So pretty much you see that year over year growth has been pretty impressive, right? Like their gross profit margins are great. However, they are losing money, right? They are still not profitable. One of the things that I hear about is, high stock-based compensation. In fact, I have a friend who is in SoFi, joined recently, and there's a big, stock-based incentive structure that is given to all employees. They're pretty much maybe, like the early days of Amazon or a lot of big other tech companies. So that is something to keep in mind, and that is probably one of the big reasons that the sentiment has turned pretty negative against such companies, because they're not yet making a profit. It invests a good amount of money in sales and marketing. So if you probably see SoFi on your Facebook feeds or your Twitter feeds, etc., you see they're investing a ton of on a ton of ads and social media uh, uh, stuff to acquire customers. Although, I read from their SPAC S1. So in fact, I should have mentioned it. It was launched as a SPAC last year, and by Chamath, actually. It's one of the few SPACs by Chamath, which has actually was doing well for some time, and suddenly the sentiment has changed. But essentially, there are warrants associated with it as well, which they recently have redeemed, and so some of that sentiment has been against them, but it is a growth story, right? And pretty much they are moving everything in the right direction, except that maybe the market is probably not just in favor of these kind of companies for now. Okay, so with that in mind, I've made a list of some of the bull cases and some of the bear cases for this company. Okay, bull cases, they're growing very fast. You see the numbers, right? And in fact, I compared some of the numbers with what they had promised in S1, right? When basically the SPAC went live and the SPAC presentation. So unlike a lot of companies which promised a lot in their SPAC presentations and delivered, pretty appallingly later on, they pretty much lied to the investors. If you have invested in some SPACs, you have probably been burned. But pretty much everything that they promised on their SPAC presentation has been fulfilled, and in fact, they have beaten that. So if they are, said they will reach, let me go back, they will reach about 4,000 here, 4,400 million. I mean, this is in thousands, so this is 4 million products by 2021. In their initial presentation, that this number was 4 million, the target by end of 2021. So it's not even end of 2021, it's Q3, and they've already exceeded it. Pretty much all these metrics that they promised have been fulfilled from their SPAC time. So that's a good thing for me to see. Okay, lot of optionality. So if you download the app, you see a lot of things they can cross sell. Once you are on the platform, once you put money, they will probably try to sell you on a lot of things, right? And I believe I'm still on a traditional bank, but I think once I move to such kind of a platform, I will probably also not shift. So switching cost is probably high, right? A lot of young customers prefer digital banking instead of legacy banks. So that's another bull case. And according to them, the TAM is huge, right? About 22 trillion. And they are still a very small player in this market. Okay. So what is the bear case? The bear case is they have a lot of interest rate risk, right? With high interest rates, loan originations may be affected. However, right? However, their biggest source of revenue has been student loans re-origination, which has been on a moratorium for the last 2 years because of COVID, right? And it is due to end by middle of this year. I don't know the exact date, but sometime in May. So they have pretty much not got, their in fact growth on student loans has been negative for the last year. And in spite of that, they have continued to grow, which is pretty impressive. I listened to their earnings call last time around, and this point really, I think, was really interesting for me to see. They sell the loans to a few banks. However, recently they have got bank charter, so they can essentially operate like a bank, and they now have access to cheaper money from the federal government, which will so So I think that concentration of loan buying, that risk is pretty much switched off. A bigger bear case is they are not profitable, so they're still burning cash. Stock-based compensation is pretty high. Although their cash flow from operations, they are improving, but the market sentiment is still pretty much against these sort of growing companies for now. And a bigger bear case is legacy banks entering and improving their digital platforms. So companies like JP Morgan and Citibank, etc., they try and copy SoFi's model and try and improve their platform and upsell their customers. They have a pretty impressive management team headed by Anthony Noto. I always like to pay attention to the management team. One thing that bothered me a bit though was none of the founders are part of the a company now. And when I read about it, there were a little bit on public information that we have. One person was caught up in a sex scandal, and a few other people, they did not really resonate with the growth of the company, with what the board wanted, etc. So basically they brought in a new CEO, Anthony Noto. He's the ex CEO of Twitter, he's run NFL as well, ex-partner at Goldman Sachs. So pretty much a very he has connections in the industry. I went through the whole management team. Pretty much everyone has worked in big banks or big tech industries in the past. So that is a definite positive for me. A lot of job openings on their website as well. So that tells me that they are also growing very fast. 22% of shares are held by insiders. 38% are held by institutions. I mean, and they are buying more. So that's a little bit about the management team. Valuation, there's a little bit of error here, so I'll correct that. Market cap of about 9 billion right now. I will correct it on the presentation. Enterprise value to sales for the last 10 months is right now at 10. If you see next year's multiple, it is trading at about 6. So, I mean, for a company that is growing so fast, this does seem to me a pretty low ratio to me. However, with the sentiment so bad right now, we don't know exactly how SoFi should be valued, to be honest. They are expecting revenue growth of more than 50% plus in the next few years. Their gross margins are 70% plus. So they almost operate like a tech company, and a big part of their, I think, is because they have no brick and mortar stores, so they save a lot of operating overhead and they cross-sell to their customers. Interesting thing I saw was their NPS score is 90. Traditional banks have an NPS score of 20 to 30. So pretty much who's using SoFi is recommending it to other people. In fact, the referral rate is also very, very high for a fintech in the industry. So it was hard for me to come up with a valuation. But one thing which I did want to point out was their Galileo platform right now is bringing in about $200 million of revenue with very high margin. So just that business, if we just take, just current price to sales ratio, at a very conservative basis, I think just that business, maybe of 10, just that business is probably trading at, it's worth at least 2 billion. And as a company, and it's a very small, it's less than 5% of their revenue, right? So we'll have to do some sum of parts to come up with the valuation. Another, I think, the downside for it is, which I read, was how are traditional banks valuated. So traditional banks are valuated at price by book value. And for example, JP Morgan is trading at a price by book value about 1.6. Okay. So if SoFi is probably trading at that value, their price by book value is 5.5. So if you multiply it by 1.5, they're probably, their downside is like $8 or $9. So that gives me confidence that, probably, SoFi is trading at a decent valuation right now from traditional metrics. And if we treat it as a tech company, it should be valued at a lot more. That is my thesis of investing in the company. Some catalysts: recently, they were approved for a bank charter, which gives easier access of capital to SoFi. Student loan moratorium, I mentioned, it's ending in sometime middle of this year. That should benefit them a lot. And I did not know this, but they have got naming rights for this stadium in Ingrid, California, for, is it LA Rams? I don't follow NFL too much, but they seem to be like, the number one team in the West NFL district. And 2022 Super Bowl is happening at the SoFi Stadium. I thought it's a good catalyst. I think a lot of people, it's the most watched event in the world. And when people see, SoFi Stadium on their TVs, etc., I think that will bring in a lot of marketing to them, just free of cost. So that is something that I thought was interesting. Sentiment has been pretty bad for all tech companies, especially which are losing cash. Fintech sentiment has also been pretty poor. So, very hard to say where the bottom is on SoFi. It's been, pretty much butchered in the recent sell-off, like a lot of tech names. It went up to a high of about $28 last year, and this is the spike during the bank charter. When the bank charter news came in a couple of days back, it went up to like $16.5. And again, the sell-off started the last few days again. So it has reached $11 as of Friday. Pretty much nothing to talk about on a technical point of view. And my final thoughts are, it's an exciting fintech company, rapidly expanding, a lot of optionality. They've also gotten approved for the bank charter. And I feel that the downside is pretty limited, given the price by book valuation measures. So I feel it could be a really good long-term investment, especially at these prices. Unfortunately, I am invested at at higher prices, but I'm going to hold on to my stocks. This does seem to me a very exciting company, and I'm attached emotionally to it as well. Just having seen the company grow from where it was to where it is now. So I'll end with the final thoughts and let you guys ask me questions.
Great. Thank you so much, Akhil. If anyone has any questions, go ahead and throw them in chat. We'll get to those chat questions in a bit. If you'd rather come on audio, you can raise your hand. Lots of great information in there. First of all, I wanted to applaud you for pointing out that you may have an emotional attachment to the stock, because I guess it was Rice University. That's when you had the privilege of being involved very early on. The founders are from Rice, right?
Right. One of the founders, not everyone.
One of the founders. All right. That was great. Great context that you added that. I appreciate that. And then a few notes I have here. The catalyst, that was great. That is the Los Angeles Rams. The Super Bowl's on Sunday, February 13th. I love those type of trades. And I'm putting this on my list as something I might want to trade for the week. maybe going into the event. You don't want to buy after the Super Bowl, obviously. That's when you'd want to sell the Monday after the Super Bowl, right? So like a week before, maybe you start looking at the chart, and if everything else looks good, and if it looks like a good entry tech wise, maybe get in a few days before the Super Bowl and you sell that Monday morning. Might be a good trade idea. So I appreciate that you brought up that catalyst. Couple other notes I had here. Anthony Noto, right? I was doing a little fact checking. Just maybe I misheard it, but I think he had said he was CEO of Twitter. I just googled that quickly. It says he was CFO of Twitter.
CFO, sorry, yeah,
CFO. Okay,
yeah,
great. So it's interesting because in terms of valuation, right? A lot of this comes down to valuation, and he said SoFi is social finance. And honestly, I have never come across SoFi except on Twitter as a stock. It's all over my Twitter feed for like 6 months now. SoFi everywhere, right? But as a company, I've never touched it or had anything to do with it. I was a little surprised to see at a 9 billion valuation, it's only 3 million customers. Based on like the amount of noise and volume it gets on Twitter, I was like, man, they probably have like 20 million customers. 3 million seemed a little bit low to me. I just, again, valuation, I don't know anything about this industry, but I'm like, that's like $3,000 per customer at 9 billion. I'm wondering if you could just, because I didn't understand the math you did there on the price to book value. Can you pull up that slide and walk us through that again?
Yes. So I was trying to see how banks are actually valued in the industry, and they are valued at a price to book value. Okay, I have never used that metric before, and I think valuation of banks is a little more complex than valuation of SaaS companies, etc. Right? Because they have a lot of debt on their balance sheets, right? And they're carrying some risk. But essentially, what I was able to read is that, hey, banks trade at some kind of a multiple on a price per book ratio. So, for example, I'm taking an example of JP Morgan. JP Morgan is trading at about 1.5 multiple of its price per book value, right? So it's price per, if it's price per, I don't remember the price of JP Morgan, probably it's 130, 40 right now. So if you divide it by 1.6, that is its price per book value per stock, okay? So the SoFi's price per book value is 5.5. So if you think it should be trading like a bank, then probably the downside of it is $6 or something, right?
Wait. Okay, hold on. That's what I don't understand for a second. If JP Morgan's 1.5 and this is 5.5,
yep.
Wouldn't the downside be like 70% or something to get to 1.5?
No, so basically JP Morgan is trading at 1.5. So you have to multiply its price per book value by 1.5. So 5.5 multiplied by 1.5 is about 8.5. 8 or 8.5.
I see.
Right. So if you think it should be valued similar to JP Morgan with its price per book numbers, it's probably downside should be limited to $8 or $9. That's my understanding. I did not know actually a lot about. I've always thought of SoFi. As I told you, I invested in it emotionally, not looking into a lot of. I was excited by its growth initially, but I was just interested in seeing if what is the potential downside to it. And I mean, in the worst case, if you think it will reach its price per book value, probably it will reach $5 or $5.5 to $6. I hope not. It reaches that price point, but normally banks don't trade below their book value because that is the minimum that they own on their books.
Got it. I appreciate that clarification. Regarding their financial position, are they, one of the things with higher or fear of higher interest rates is companies that would have to raise capital. It's not going to be as a good market for raising capital, harder to access money, but worse terms. Have you looked at that, the cash runway, and if they need to raise capital soon?
So they might need to raise some cash. They have about $600 million on their balance sheet right now. So I still have to look at what their cash burn rate is. But I think like after the bank charter, they will probably have easier access to capital, right? So their overall lending rate should go down. So if it might be more beneficial for them to raise debt instead of a stock. I mean, if the I hope not they raise any, they dilute the stock any further, because I mean, in this market, if they do, they will probably get butchered. And I hope that, the CEO right now he's been worked on Wall Street pretty much all his life. So he probably knows a lot about this game. That is what I'm betting on.
Okay.
But
Right,
I'll do some digging and see how their cash burn rate is.
Okay, yep. And Bart had the same question in the room there. So thank you for covering that. Had a couple more questions here. Can you pull up that slide where there was the metrics that they showed, user growth, and there was something called product growth? What is meant? I think I can assume what is meant here, but if you can spell it out for everyone, when it says products, 4 million products, what does that mean? 4.3 million products.
So it pretty much means like, whatever they have on their platform, like insurance products, investing products, brokerage, credit card issuance, etc. Right? As a sum total, what is the, the how the number of products that have been that are selling. So it's almost, treat it as a SKU. So if let's say insurance is a SKU, then that's, one product
Per customer.
per customer. Yes.
Right. That's what I thought. So when we see here on the left-hand side, close to 3 million members and then 4.3 million products, that means each person has like, what is that? Like 1.25 or something. Products, right.
Right. So
for
right.
purchasing.
So,
okay, good.
Right. And they also mention on their one, in fact, this was not mentioned in the latest presentation, but I looked up one of the presentations from last year, and they had mentioned that once a customer comes to their platform, he about 60% of times, like, the 60% probability that he's going to end up buying another product. So just the cross-selling optionality is pretty big with them.
Okay. Perfect. Thank you for that clarification. I got one more. Vince is just verifying it's the Super Bowl is in 2 weeks at SoFi Stadium. So again, great catalyst on that. Says Caesar. Cesar, we'll come to your question in just a second. My final question is the bank charter. What was the significance of that news? What does that really mean to have that bank charter approved? And how do you, maybe as a follow-up question, explain the market price action where it went up a lot on that news but gave it all back?
Yeah, so my understanding is with the bank charter, basically now they will be able to originate loans on their own, and they will be able to raise money from their Fed on their by themselves. Right now, they have to sell whatever they originate the loans, but the loans are actually carried by someone else. Okay, so that is one significant. I think another is lower rates of interest rate. They will be able to they will be able to raise more capital at lower interest rates from the federal government. That is another thing. And I think it just gives more confidence to customers having that bank charter status for SoFi, that their money is also safe.
So do you know if this was something that was expected, or
yeah,
the timing of it was expected? Or I'm just trying to understand the price action, because it did go up significantly and then gave it all back.
Yes. So from what I have been following, they were approved. They were pre-approved, or I can't find the exact word, but potentially approved, like about on this bank charter since about last year. And they were waiting for the final approval, right? And we didn't know when it's going to come. So the news came in a few days back. I think it was about 2 weeks back. And you saw the volume. If you look up the technical charts, the volume was huge. It was like, 2 or 3x the average daily volume of SoFi. Uh, so in fact, I was thinking that would mark a reversal, but again, the ARKK and some other growth stocks, they just sold off like really badly last 2 weeks. So I think SoFi was probably a victim of that.
Okay. All right, great. We had a question here. How much deferred interest is tied up in their student loan portfolio? How much deferred? Oh, yeah, that was a good question. Regarding the student loans, and then expected losses from this portfolio could be high. Yeah, so you said there's a moratorium on student loans, which we've all heard about in the news with COVID. Well, explain what exactly that means to the company. What this question about deferred interest? I think you can see that question in your chat.
Okay, so I think what happened was during the COVID, students were probably they were exempted from paying their student loans, right? And this has been happening for the last 2 years. So even if you wanted to, if you have probably got student loans, there was no benefit for you to either refinance it, etc., right? Because you are not paying right now. So that is the basic thing that I understand. I have to look into what is the deferred income from their student loans. It might be pretty significant because that was their biggest lending segment. So I'll have to do some homework out there. But yeah, I mean, pretty
is a
much
general idea though that the students didn't have to pay, or the past students, they didn't have to pay interest on those loans, and when the moratorium is over, they'll start paying interest. So that should be a plus, right, for the company when the moratorium's over.
I believe that should be a plus, and more students will also refinance their loans from other company because they will have to start paying back. And they will also, new students who are coming, they will also probably take more loans. So in my view, I think it should be a positive.
Okay. Okay.
But I'm seeing I seen the true, and it could cause the stock price to drop even further. I don't.
Yeah, I'm wondering if you'd like to hop on here, because this is an interesting question, Cesar. I'd like to hear your view on this if you want to hop on. If not, we can.
Sure. Can you hear me?
There you are. Yeah, I hear you.
Yes. I'm in the financial industry, and we have a lot of portfolios that have got deferred student loans. And when students are not paying, or people are not paying for the last 2 years, you got all that deferred interest there. And depending on what the government's going to do, I mean, they're not going to be able to pay that up front. When they get back to start paying again, it's going to cause a lot of delinquency, a lot of losses in like SoFi, B of A. All the banks are holding all this. I mean, that's a lot of interest that's out there. It's like a forbearance or deferred, or whatever you want to call it. And it's going to cause a huge tidal wave of payments due in 6 months. That's why the government continues to put that moratorium on, because it knows what's coming up. And it's not going to be pretty. It's not going to be pretty.
But but it sounds like an accounting thing though, because they haven't been being paid at all the last 2 years, right?
Correct.
So they'll start getting better cash flow when the moratorium's over, but right. So I'm trying to understand. Yeah, I hear what you're saying, because now the delinquencies become apparent, right? Once the payments are due and you see who's not paying, becomes apparent, and then you can, I guess, from an accounting perspective, some of them have to be written off or however that works. But on the other side of that, they start getting payments finally. So how do you net that out in terms of what's good for the company there?
It all depends on what they're holding. So if you got half and half paying, and say, it's been 2 years, I can't afford it, I'm still in hardship, whatever be the case, And if they can't refinance, it's just like, during the mortgage crisis, financial crisis, that's where
Got
the
it.
foreclosures went through the roof.
Got it. So you're saying there may be built into the stock value, an asset value of all of those student loan holdings, and the market may be, assuming a certain asset value, but a whole bunch of that may have to be written off. That's going to surprise the market. Is that the idea?
That's what I'm thinking, because it all depends on how much they're holding, how much
Got it.
deferred interest, and how is that in their books, right?
Got
I
it.
mean, that's what I'm concerned about.
Valid concern. Thank you for bringing
Yeah.
that up. I appreciate
Mhm.
it. Looks like we have Ramit. Your hand is still up. Did you have a question?
Yes, do you hear me?
Yep.
Yeah, I noticed that there is no option trade for SoFi. Is there any reason why not? Because with this market cap of close to 8 billion or something like that, how come this doesn't have any option?
It's interesting. No, I do see
No,
options actually.
they have a lot of options.
Oh, they
Yeah,
do?
weekly. They have weekly. Maybe your
I
app is giving you an error tonight or something, but I see
yeah,
them.
wrong with. Sorry.
Oh,
Yeah,
actually,
I'm
so on
retracing.
there, one more thing I wanted to add, they are introducing options and margin trading on their platform soon. So that should even bring more customers on their platform. I don't know if you are trading options on SoFi platform. It doesn't exist right now.
SoFi has a stock trading platform.
Yes, they have an investing.
Oh, I must have missed that.
That's another segment of their business which is rapidly expanding as well. So
Got it.
uh,
Okay. Got it. As an aside, this one does have options, but if there's a stock that doesn't have options, I'll tell you the CBOE doesn't automatically list options. So for newer securities that are listed, or in this case, it was a SPAC that went public that way, or smaller companies with less liquidity, they actually have to get requests to do that. So we've done that on a few occasions, where we'd email in support@cboe.com, and anyone can do that. Any retail investor can request options or request options to come more frequently. If it's just monthly, you can request weeklies or request more strike prices. It's not really based on how many requests come in, though. They have to meet certain qualifications, but they are prompted by demand. So that's an interesting note about options, but yes, they do exist in this case. So awesome presentation, Akhil. We're gonna keep our eyes open on this. We have let me just share my screen one more time. All right, we opened the SoFi research group, of which Akhil is an admin. So if you're a VIP member, you can hop on over to that WhatsApp group in our VIP community and continue the collaboration there. Akhil, thanks again for that awesome presentation.
Thank you. And I think Cesar raised an important point. So I'm also going to look into it and maybe chat more on the group.
Yeah, and that's also a catalyst when that comes up in the news, and when that moratorium is finishing or whatever it is, you can probably see a lot of volatility. And I can't tell you, I don't have a thesis yet which way that will go, up or down, running into the end of that moratorium. But that's probably something that's going to be tradable if you can figure out what the market is thinking in terms of that coming to an end, the moratorium. So going forward, looking forward, we have this Wednesday, the COO, Chief Operating Officer of Good Gaming, GMER. It's an NFT gaming company. Has not worked out yet. Has not been a good trade, unfortunately. But it's a very interesting area. If you'd like to learn about NFT gaming, we'll talk to the COO this Wednesday. I know they're doing a little bit of a marketing blitz right now. They were on Bloomberg TV Saturday night on some investing show. So we'll see how the stock does tomorrow morning, and we'll talk to the COO on Wednesday. Make sure to follow us on YouTube and Twitter. We post a lot of our videos up on YouTube after an embargo period for our VIP investors. And with that, we are going to turn off our recording and hang on the line here and talk to our VIP members about some trading coming up this week. So thanks for joining us, everyone.